Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
The other part of this isn't just sentiment because of chips and AI, oh my, but also market returns. You know, this thing that I have, money goes home. This is where it's going. So US is down 3% year to date, but China's up 19%, Brazil 16%, Germany 18%, right? This is the defense QE that they're spending money because US, Trump won't on defense and on Ukraine. You go right down the list. That is absolutely the definition of money going home in percentage terms relative to the US stock market.
Yeah, there's no question. And I'd love to hear your views on that. I know you've expressed them to members, but of course you're always generous during our power hour here. And be interesting to wonder about, is that going to continue? Is this sort of idea of the at least periodic US exceptionalism as we continue to push into, you see what Germany's spending? I mean, it is dwarfing kind of spend on a GDP basis that we've seen from countries in a long time. So really some big money being spent. I don't think Europe is all that great, and I don't think US exceptionalism goes away, but I cannot, fight a trend which is clearly a very strong one at this point. So, that's the difficulty. You have to kind of separate the sort of, underlying fundamentals from what the market just wants to do. We had some I think it's been very mechanical actually since we started getting quite a bit negative around 6,000. We've really had this big kind of Vega, Gamma sort of push down, very kind of mechanical because of the tail and the dog that we always talk about, how big derivatives are, how big option markets are now, sort of help to push us down. All the synthetic gamma as well, right? All those levered ETFs. Well, where are those ETFs positioned in the stocks that people like to trade back and forth? The ones with lots of.
And remember, the ETFs can also rebalance abroad. It doesn't have to be US. So,
yes.
And that's clearly what they're doing. And by the way, CTAs can do the same. Just in that key word that you just said made me remember this post that I had for clients, which was mechanical flows versus money goes home, right? So money goes home is a theme for several weeks, actually months, because I said when Trump comes in, there's going to be tariffs and there's going to be deportation and the dollar will fall. They need it to. That is their baseline bet, is they want the demand for dollars to fall. They need yields to fall. And long story short, they're going to go chase yields abroad, and they're going to use less of the petrodollar as a means of exchange. They've been settling in gold, etc. But the point is, it has just been confirming. So pre-Trump, after the election, into now, we see it. We really, really, really see it. In fact, Deutsche Bank came out and said foreigners hold a record amount of US stocks, and they have just started selling. Deutsche Bank says that there could easily be $1 trillion of foreign selling. This is way bigger than the corporate demand, which is the usual biggest buyer, right? Where we have all these corporate buybacks. Anyway, this is an estimate of foreign, again, money goes home based on their estimates. Not only that, but we do have 18% of foreign interest in the US equity market. It's interesting. I found this chart, which is, it is 18%, but in US dollars, it represents 25%. So we have some risk as it relates to the sale of equities and why the VIX has not, exploded past 30 like it did during the FX currency drama of July. July was the yen carry trade unwind, and we had that VIX spike to 35, and we had that convexity rally after the 1 month of selling, right? In the same way that we had a similar percentage return drawdown in the Qs between July, 15%, into the August 5th low, and most recently, the mid-February into the mid-March. We had the same percentage terms, but no volatility. Very, very different creature, as you're just talking about. Why hedge when money's just going home? So Chris is a quant and had the same comment recently. Option pricing in every metric on the planet showcases that nobody is aggressively hedging or panicking. And this is the US equity outflow, which is the largest, relative to the COVID crash, which by the way, they came in and did policy intervention. Same thing with March 2023, which was the backstop. Remember on that Sunday evening, the White House, the Fed, the Treasury, they all came back. They came out and said, we've got your back. Every deposit is safe. That was a Silicon Valley Bank debacle. Those were policy intervention levels signals that helped money go back in to US equities. We don't have that right now. I have a big question march over, to 2025. Equities have left. You can see the returns that I just showed you abroad. So we need some reason for them to come back in. And why? I mean, right now, the point is that they really are looking at tariffs as a way of, meaning the Trump administration. Besant has been out. Mirren has been also on the TV circuit with LaDuc, the whole crowd. And they're just saying, we've got to reverse trade deficit. We have got to get a trade balance. In order to do that, we're going to have to go through detox period, but dollar's going to have to come down. Yields are going to have to come down. They keep telling us that it's going to be disruptive to the equity market, but the equity market doesn't really want to hear it. So we get unfortunately, we get this mercurial president as well, who uses this time to make sure that he has, negotiation bandwidth here. Market's not falling apart. It's not breaking out. And long story short, we really have a mercurial market, and option flow has been limited in its helpfulness because everyone's kind of waiting to see if he's really going to follow through or not. So, but then you have other analysts that are still not seeing the decay. They're seeing some re-rating in, like, for example, what you call the balance sheet heroes of the Mag 7, 10, whatever, that right now have gotten cheaper. So they're still trying to get in there and buy, but it seems to be the exodus of money goes home doesn't really care what the earnings re-rating looks like. There are many other places. They're hoping there'll be other places that will reward them with their presence. The problem is they really don't have the same type of market that we do. Not the liquidity, not the variety, not the financialization. I could go on and on. So many are also hoping that will come back to the US. That money flow will come back to the US.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.